Welcome back to Brashenomics. Saving money, certainly one of the things that's always on people's mind. And, Glenn just really brought up a good point about also just protecting not just your money, but your additional assets and in your house, and some easy ways to do that. Boyce Goff joins us, CPA and owner of GDC Financial Solutions. Welcome back, Boyce.
Thanks.
You guys must be entering super busy season.
That we are. We're swamped.
Like,
which is good. Got a lot to do.
I am going to leave here shortly. I'm going to go back to the office. And
no, that's why you hire assistants and staff.
There you go. People are starting to get their taxes done. Everybody had to get their W-2s by, last week or something like that. And everybody's always looking for money to ways to save money. I mean, for 2011, it might be a little bit late, but you had some ideas actually for, 11 months from now when we're going through this drill again, and some easy ways to start today on saving money.
Well, one of the things which as we go through and we do our tax returns for our clients, one of the things that we always run into is, I got a great big refund. And of course, people don't seem to understand the reason why you get a big refund is because IRS has your money. And so we sit down and tell clients, no, you shouldn't get a big refund. You should be within a couple of $100 one way or another. You may have to pay a little, or you may get a little bit back. But then a lot of people, when they do their W-4s, they don't realize that you can actually go through your W-4 and increase the amount of exemptions you have based on the various deductions that you may have on your tax return. Thereby, when you get your paycheck is going to be bigger. So you're going to get that refund during the year as opposed to getting it at the end of the year. Now, some people say, well, it's an enforced savings account. Well, wouldn't you like to be able to pay off your credit cards with that extra money?
Or not have credit cards bills in the first place?
Or not have credit card bills in the first place. We see that quite often. And so I'm always constantly working with my clients, adjusting their W-4s to make sure that they're not overpaying their taxes.
And, we see that when people buy their first home, all of a sudden they're going to have this big, right off the end of the year, $20,000, $30,000, $40,000, depending on the size of their house, and they don't make these adjustments.
And then they're sitting on a big refund, and of course, through the year, they're sitting there struggling to make payments or being able to pay bills down. And the next thing you know, if they don't have the cash, then what do? They go out and they use their credit cards, and of course, the interest rates. We won't even talk about the interest rates on credit cards, which is a little bit of highway robbery. But
and we're actually going to hit a little bit on that later. But how easy it is to actually get credit cards and buy anything you want. I mean, people think credit's tightened, but I even saw the, on what was it over the holidays, these Best Buy ads, selling credit. Oh, finance it. And it's so easy to get yourself in trouble. And having money come in on that monthly basis as opposed to paying it all back at the end of the year certainly seems to make more sense.
Well, if again, as you bring it in during the year, you could put the money into your retirement plan is a great way to save. As I tell a lot of clients, sit down today and commit that you're going to save at least 10% of your income. How are we going to save that? We're going to put it in a 401k plan. If you've already maximized that, then put it in a savings account because you can have the bank put the money in a savings account. Out of sight, out of mind. And it's amazing at the end of the year how much money is built up in that account, which you can then use to pay off bills, credit cards. But get yourself as fast as you can to a cash basis situation.
Is that, that's if you don't see it, you won't miss it kind of thing.
That's exactly right.
What are the other ways people can contribute? Now, as far as I know, you could actually just set up a separate account and have your auto pay from your employer go to that. It doesn't even have to go just to a 401k.
That's correct. You can have it done that way.
And so these small amounts, as you're saying, it really does add up. So, you talked about getting into this cash life. Right. Getting off the plastic, and
dope can become plastic is like dope.
It's easy.
It's easy.
It's easy to.
Need a fix.
Just keep sliding that card, right?
That's right.
But when you have these needs versus wants, and you have the ability to actually pay cash, I think people probably spend less when they actually have to count the dollar bills out of their pocket than just slide and sign.
Well, when Heather and I came in this afternoon, we were sitting there talking about, if you have the cash in your hand and you're sitting there looking and go, well, the latte cost $4 and I've only got $3. Guess what? I'm not going to buy the latte today. And so if you were buying a latte every day at $4, that's $20 a week. So now that's $20 more or $100 a month Next thing you know is that's quite a bit of money over the year. So that's $1,200. Now, what could you do with that? I can pay off some credit cards. Can also pay off other debts. Other things you need to be looking at, too, are things that expenses that you've incurred over the years because of your membership in something, such as, not to pick on Netflix, but you buy Netflix, you watch it for a couple of months and things like that, and all of a sudden you realize, I'm not watching it as much as I used to. Then you start looking at your credit card bill, and that's $17 a month going out the door, or membership fees for other things. And just go through and look at your credit card bill. Cancel those things. Get rid of them. And it mounts up over a while.
Especially if you have 3 or 4 of these, it's the kind of nickel and diming mentality of a lot of companies. Mm-hmm. It's the inexpensive monthly fee because it's because people don't even use it for that much. Gym memberships. Hey, it's February. How many of you guys have already failed on your New Year's resolution and can quit your gym membership now?
And how many times have you used it?
Right, yeah. 3.
Well, I'll give you an example. I went through my office the other day because, it's this time of the year is always a little bit of cash crunch because we're coming out of the fall and going in just before tax season. So I went through my office and said, what are expenses I'm incurring that I don't need to do? And I went through and looked at everything. In about 15, 20 minutes, I picked up about $1,800 a month. Now, that's over $20,000 a year. That's money that was going to somebody else that I really didn't need them, but I wanted them. And so now I'm going, no. You're not going to do that anymore for me. I'm putting that in my pocket now.
Yeah, I mean, there's that do-it-yourself mentality, and especially when you have staff. I mean, there's that difference of taking it in-house or out-of-house. We looked at one of the mistakes my wife and I made is, we had our gardener come in once a week through the winter. Somehow, I think we got billed when it was snowing because they must have, shown up and looked. I don't know what they did, but
well, they mowed that snow.
They probably. Well, I promise you they didn't, because unless they have a snow replacer that comes out the back of the snow mower. Uh-huh. But
you didn't see the snowmen that were built after they left?
They did. They looked real good in those. They did build some incredible snowmen. But those little things and making those adjustments even throughout the year, because I mean.
Well, I'll give you a very good example. Let's talk about house insurance and car insurance. We moved off of Snoqualmie Ridge and moved downtown, and so I went through my house insurance and my car insurance, and I was able to cut expenses off. Just because we moved downtown, we were living downtown, I was able to recoup about $3,000 a month. I mean, a month, because of extra expenses that I was paying that I didn't need to pay. Electricity bills went down. Going through the insurance, I found, well, golly, I'm not driving my car 10,000 miles a year now. I'm driving my car maybe 4,000 miles, and there's a break on that. You got kids that are making that are making A's and B's. There's a break for them. So every little thing breaks.
So finally, the parents are getting paid for grades.
Yeah, the parents are getting paid for grades. Of course, the kid's standing there going, "Where's mine?"
Right.
So,
again,
little things like that.
We're here with Boyce Goff, CPA and owner of GDC Financial Solutions. Boyce, we have just a few seconds left here before we have to go to break. Talk a little bit about maybe figuring out where those expenses are. You said you went through them in your office.
Well, I just went down. I have everything on QuickBooks. As we have all of our clients, and so I just went down and started looking at every expense, because you can pull it up real quick and you can just go through and say, all right, what is this for? Why did I spend that? Do I really need that? Is that something I really need? And one of the things that I run into in my business, I end up buying software that, oh, golly, we're going to do this thing. It's going to be the newest thing on the block. And it ends up sitting on somebody's computer for 6 months. And I'm going, why am I paying this fee? And nowadays, the computer companies or the software companies are getting really smart. They don't sell you the software. They rent it to you on a month-to-month basis. So they license it to you. So all of a sudden, I'm sitting there going, why am I paying $200 a month for a software package I'm not using? Canceled it.
And you do have to be using it. And I think the same can be said with, your personal finances. You can go through just your bank statement if you don't have
credit cards and your bank statements,
and just look at the things that you just don't even use. I mean, you literally don't use it at all, and just sucks you dry.
Well, other people too sometimes say, well, I'll just use a debit card. I'm going to give Heather a little bit of a problem. The problem with the debit card...
Oh, we always love to give Heather a little hard time, don't we, in here?
So you go use a debit card. So you go over to Taco Bell or Taco Time, and you go, well, I want that. I want 3 tacos and an enchilada. And so you pull out the debit
Somehow
card.
I don't think Heather orders 3 tacos and an enchilada, but I got your back, don't worry.
And so you slide the old debit card in. That's just like using plastic. I mean, it's plastic. You're using it. And when it's out of sight, in other words, when you don't have the greenbacks in your hand and you're not counting them out, there's a disconnect. And so you need to just understand where you're going. And that may sound like a little old adage, but the people who watch that kind of stuff are the ones that get
saving your pennies makes the dollars, right?
That's right.
Well, Boyce, thanks so much for joining us. It's Boyce Goff with GDC Financial Solutions. And, a lot of people, as Boyce even mentioned, try to save money on things like insurance. Charles Tobin's going to join us next with AAA to share a few tips that you may be able to take advantage of to save money on your own insurance. My name's Ben Brashen. You're listening to Brashenomics.